Good day, this is from GTC News with our stock scopes for the 7th week in 2018. You got to be happy to receive this stock scope edition since we are just after a smaller correction on the stock markets, so whatever we put here will gain on these momentums. This is a bit of a mixed pick by us. We want to show you what would happen if you pick one of those companies which might will not give the best ever report. We want to show you that you can benefit from those as much as of the biggest charts. Certainly, most of these companies are well known, but they don't always provide us with a clear direction. If you want to go with any of them, read and take these facts seriously under consideration. First up is the First Data Corporation, traded on the New York Stock Exchange under FDC tickers. First Data is scheduled to release their next quarterly earnings announcement on Monday, February 12th in 2018. First Data Corporation is one of the global leaders in electronic commerce and payment services. The company makes it easier, faster and more secure for people and businesses to buy goods and services using virtually and form of payment, credit cards, debit cards, stored value cards or check at the point of sale over the internet or by money transfer. First Data Corporation is a large player in the global payment transaction industry. The company may not be synonymous or as sexy as some of its competitors, namely PayPal or Square, but the two aforementioned rivals only provide some of the services of FDCs. Sticking to pure facts, this is what we must see before this earning. A partnership with Jack Henry, where FDC is the credit card processor, counts as a large outsourcing win. We are talking about 403 million transactions respecting over $108 billion each month. An expanded partnership with First Citizen Bank, which utilizes FDC's single issuer processing platform with $1.5 billion in consumer loans. Processing installments loans for Barclays, where FDC is a solution to expand margins and shift to digital. It is a $200 million deal that has been signed but not yet implemented. Another partnership with Wally National Bank, who has $23 billion in assets with over 200 branches in New Jersey, Long Island and Florida. All these in 2017. It's not a bad. We don't have any more comments. The next is the Baidu, B-I-D-U, in the Nasdaq. Baidu is scheduled to release its quarterly earning announcement on Tuesday, February 13th in 2018. Baidu is a Chinese language internet search provider and is based in Beijing, China. The company offers a Chinese language search platform and conducts its operations principally through Baidu Online Network Technology Corporation Limited, a network of third-party websites and software applications. The valuation of Baidu through the integrated analysis of its multiples indicates the balance sheet of the company's capitalization with low growth potential. Baidu's average monthly return is 3.15%, which is objectively a good result, but we must state that it still shows relatively high volatility on a monthly basis. Baidu is always associated with the Chinese market as a whole that is growing by almost 7% a year, and this positive impression automatically shifts to Baidu. As we see the mentioned multiples, the current and the expected growth rate of Baidu do not indicate a clear undervalued state of the company. In our opinion, the potential of Baidu is in the medium term more likely to be classified as natural, but you never know. Since we are looking at quarterly data, we must talk mid-term, which does not mean that the company will not provide us with opportunities either short or long-term. The next is the Applied Materials, AM80 on the Nasdaq. The Applied Materials is scheduled to release its earnings reports on Wednesday, February 14th, 2018. Applied Materials develops, manufactures, markets and services semiconductor wafer fabrications equipment and related spare parts for the worldwide semiconductor industry. Customers for these products include semiconductor wafer manufacturers and semiconductor integrated circuit manufacturers. Revenues for the top 7 semiconductor equipment companies grew 39.3% in 2017 on sales, while the memory sector grew 60%, which we must add here if we talk the applied materials. The semiconductor equipment revenue growth forecast is in 2018 will be a solid 11%, but it already shows a significant slowdown of the market. Every market shares of top semiconductor equipment manufacturers for 2017 showed large gains, while top supplier applied materials dropped. Next up is the DTE Energy, traded on the New York Stock Exchange under the ticker DTE. The company is scheduled to release its next earnings report on Friday, February the 15th, 2018. DTE Energy is a Detroit-based diversified energy company involved in the development and management of energy-related businesses and services nationwide in the United States. The DTE Energy Board of Directors declared a $0.8825 per share dividend on its common stock payable on the 15th of April 2018 to shareholders of record at the close of business day of the 19th of March 2018. This continues DTE Energy's consistent dividend history, having issued a cash dividend for more than 100 years. Now, this sounds very official since we received it from the company, and in this case you should know about it. Why is it important? There is a consistent pattern on the DTE chart for years, and it seems to keep following it in the future as well. If we focus only on the 2017 results, we could see that for the first half of the year has been in favor of the stock price thanks to the cold winter, but for the second half of the year could not keep the momentum going as a result of low gas prices. What we are looking at this point is very controversial. Commodity prices gained some for the last few months, but except for the few weeks, the winter was not really cold, and as of late there is a very serious accusation series against the company on power shutdowns. Very mixed feelings here, but the chart pattern should continue, which means that for the next few weeks the stock price will move a bit higher. Last up is the Coca-Cola, traded on the New York Stock Exchange under the ticker KO. The Coca-Cola scheduled to release its earnings reports on Friday, February the 16th in 2018. The Coca-Cola company is the world's largest beverage company and is the leading producer and marketer of soft drinks. Along with Coca-Cola, recognized as the world's best-known brand, the Coca-Cola company markets 4 of the world's top 5 soft drink brands, including Diet Coke, Fanta, and Sprite. If you want to be Shakespearean, here is how we should start. To sell or not to sell? That is the question. We could approach it on the other way around, replacing sell with a buy. The company's operational margin provides mixed results while showing steady earnings growth and operating margin, which is literally above average, but Coca-Cola's sales growth is well below average. The company ranks in the top 10% of its industry group, beverage non-alcoholic, and in the top 10% of its sector group, consumer non-durables, not only today but for the last decades, with a market value of $199.2 billion. Usually its earnings are mixed with results of earnings surprises and earnings revisions that are worse than average, while the short-term gains are better than average at the time of earnings. Okay, we might mix you up a little bit. The point is that Coca-Cola is always Coca-Cola, good around earnings report, and loses some bubbles in between. Don't forget, our services are going to be available soon only for our subscribers. To subscribe, go to our website to GTC.news. This was Attila Kovács from GTC News with the stock scope for 2018, the 7th week.